London opening takes place, pushes price down to yesterday's New York discount buy area, also employment change level, and it's taking this previous low liquidity. So a lot of confirmations in this area and why you'd look for a buy. Price takes previous low one more time, gives you that impulse move up, break a structure, comes back, retests, and that's retesting the employment change level. These are opportunities to get into the move. You just use your previous low as your stop loss and then move you break even once you hit resistance, a support and resistance level, or a liquidity pool or key level. So by the London opening, you'd had your buys at break even, and then you would have gone in, and that would have been it actually. Back to the mop, you had jobless claim, and then you wait for the New York opening. Now New York open takes place. Blue line, let's just go over that on the other picture actually. You can see above is grey area, that is the premium sell area, which was with the interest rate news. Then you have interest rate news is the blue line. You have a previous high, which is the orange line. Then you can see New York open took place, pushed up to that grey area, so which is also retesting the interest rate news, and they're loading up on sales. That is why then price continued towards the downside from that area. I was gutted by this. I had that all planned out, and then I got caught up in the bullish move and I changed my bias and missed out on this whole bearish move. Even though it followed everything exactly right, because it went up a bit higher than I expected, I missed out on it. And sometimes that happens. You have to just take it. And that was quite a drop. And you can see how it targeted all the previous past daily lows. And there was not much else on that day to get into the move unless you followed support and resistance towards the downside. But every time it clears one of these major previous lows, it's an opportunity to reverse. So you normally get some sort of retracement. Then we move on to, so that's Friday. So that was the first. Then we go on to the second. This was last Friday. NFP. Can't remember this one actually. No, can't remember. Yeah, I think we got the buy. We got the buy from down here. After the non-farm payroll was released, we got the push down, took this past daily low, and then we got the buy back up to the NFP level. So we just got that little move towards the upside. That was enough for me. Then we had I put out confirmation that if you see support from the NFP level, then you're likely to see a continuation down. But obviously, you don't have to get every move. You can make a lot of profit from a small distance if the structure is correct. Anyway, let's look at the London opening, how you can get into the trade before the news event so you can benefit from that move. Because when you have a news event, normally the London session will develop a trade setup that will benefit from the news event. So here is the London opening. You can see it opens, pushes down but doesn't take the low, so it's not a buy setup. So it pushes up, comes and retests the previous pre-London opening, and you can see it retest a few times. So you might have got a few sales off here, then got a stop loss hit. So this would have been a three attempts at that before getting into the true move. And you could have also took this sell from here after breaking through the London opening level and retesting it. So that would have both benefited from the release. You might have got stopped out from the wick up first, but you can see how they position themselves in sales from the London opening to benefit from that NFP downwards move. And then the New York traders entered here, which had already retested the NFP level. So we're moving down now. NFP New York open takes place, pushes down, takes this previous low here, only a little one, then gives you a retracement back to the New York open. So what you have here is the NFP bearish pressure that got retested here. Then the New York Open takes place, pushes down, retested, shows you bearish pressure. So you have a lot of confirmations for continuation down here, and that's what you get. These are the confirmations you want to look out for. These nice retests all match up in one direction. London traders are selling. NFP shows you bearish impulse move followed by a retest that shows you more bearish pressure. New York Open takes place, retest, more bearish pressure. Everyone is selling in this chart. And you can see how it pushes down, takes the previous daily lows. And that's on the 2nd of August. Then we go to this week, 5th of August. So we're moving on to a new week. This is when you got a lot of volume going into the market. So yeah, basically on gold on this one. So this one here, London opening again, pushes down. You can see we haven't taken any major lows. We're just taking those previous lows there on the 5 minute time frame. So pushes up, retests that area. So you could have got in a sell on that retest at first. Price comes down. Let's say you stopped out at break even, stop loss there. Took a loss. Price comes up again. You start to see resistance at that London opening again. You use the previous high as your stop loss, and price comes up near it and retest it again, but doesn't take you out. Then you get the continuation down and it results in profit. And that's all you're doing. The first one was pre-London, push down, retrace, found bearish support at that opening price. London opening takes place, pushes down, retests, and shows you that bearish pressure. And that's why you get a continuation down all through the London session. Brings you to the New York session here. Now, I said about earlier the retest of the light blue line, which is here. And you can see how that happens here. New York Open takes place on this bearish candle, pushes down, retested that blue line. This is also retesting a discounted London buy area. So you would consider the London traders have been pushing down for a nice buy area, a nice buy, cheap price to buy at. We took the past daily low too, so we've taken liquidity already, and we're building up those confirmations to validate a move up. So you would have got your entry down here on the blue lines near there, or you would have got a buy entry on the retest here of the New York opening level that runs along. It got retested 1, 2, 3, 4 times max. So you'd have got in all on those levels. And you could have, let's say you took a few stop loss, but as price goes up, you'd have moved to break even as you clear one of the highs because it's so consolidated. And as you clear this high here, that is your main area you would have took partial profits. And then the price goes sideways, comes back down. By that time, you would have stopped taking positions. You're looking for the main session move at the New York opening. So you don't want to be trading too late into the session. It's the same for the London session. You don't want to be entering trades all the way down here in this price action, because you'd be waiting for the New York Open to take place. And it's the same all the way over here. You don't want to be entering late into the afternoon, because you want to be focusing on the few hours after, around the New York Open or the London Open. Those are the main times. Those are the kill zone if you follow ICT. Oh my god, my voice is going. Got one more day, the 6th, which was yesterday. London opening takes place, pushes down, and it doesn't really show you much. There's no clear liquidity being taken until you've cleared this low, this drop here. That's probably the clearest one. You could have got into a buy there, but you'd have moved to break even as it went up, and then you just see bearish pressure. Price comes down, doesn't really give you much trade there actually. Doesn't really give you much setup. Price comes up. So there's no real opportunity within that London session. because price comes down, gives you a consolidation sideways, but it's not taking any major low or hitting any areas. So there's no real trade set up there. So you'd waited to your New York Open. That's the clearest one. When there isn't a trade with the London session, you normally get a very clear trade with the New York session. So this line, blue line here, is the pre-New York, and then you got the high volume light blue line, which is normally around, which is high volume news release time. So when the non-farm payroll is released, CPI news, that's normally at that time. So we just label that in case. It shows you volume into the market. And you can see that volume from there is pushing price down, taking the previous low and hitting all of these bullish confirmations here. You've got the previous day New York discount buy area, previous day New York opening. And you can see how the New York opening pushes down, retests that, and then shows you a reversal. This is a key daily template, and that's why you got a clear move towards the upside from there. So this is a very clear buy trade setup. As price goes up, you move to break even as it clears some of these highs, and you took most partial profits as it clears these highs here, as you're hitting the MOP 2 and the Asian session high or London session high, whatever you want to call it. Then you got the retracement. So this is also a trade opportunity too, to sell, but you'd have been only anticipating a retracement, but you take it because it is a potential reversal area, because you're clearing all the liquidity above. But looking at this setup, you'd be favouring a continuation up. So then you got the downwards move too, because you'd be waiting for it to clear this orange line. Entry would probably be on the 1 minute, and you'd have moved to took partial profits as it comes down here. That is retesting the London opening, and it's also retesting the pre-New York opening, and that's where you got the reversal for a continuation up. And this retest where the yesterday's MOP is, that is also the weekly opening. That's why you got resistance at that area, but some people might have got that, some people might not have. So that is recapping all of those things, and that's just following these trade templates which are here. So you got the bullish one you look for, then you got the bearish one here, and then you have other ones which are sometimes used but not always used. Just all I do is follow those trade templates at a specific time. Now let's go back to the charts and see what's happening. So we've got a downwards move from that area, and looks like it's waiting for the New York opening. So New York opening is likely to take place. You could get a push up once again, take this high, and then get the downwards move, or you could get the move from here now because it's already started the downwards move. So overall, we'd be looking for a downwards move on US30 for the New York session, because this is just the New York session premium sell area from yesterday. It's the weekly opening and it's the previous day MOP. So yeah, I'll recap that either tomorrow or the next day, and we'll just see how it went. So this whole price action here is considered a retracement, and we're looking for an impulse move down. Take care, have a good day, thanks for watching, and goodbye.